Recovers from the opening lows. U.S. Treasury Secretary Janet Yellen rules out a backstop for all bank deposits. Fed Chair Jerome Powell tempers the rate hike expectations. FMCG, private banks as well as metals lead, while IT is the key drag today.
The hike in gas transmission tariff is positive for the gas economy, Gales tells CNBC-TV18, even as it wants a review of the hike. City gas players IGL and MGL say they will hold prices till a decision on the Kirit Parikh panel recommendations in April.
The government floats an offer to sell up to 3.5% of its over 75% stake in Hindustan Aeronautics at a discount of little under 7%. The stock slips on the discounted sale.
Hero MotoCorp will up prices of its two-wheelers by up to 2% from April 1st to cope with higher costs of meeting regulatory norms. Even Aisha VECV tells CNBC-TV18 it is weighing a hike of 2 to 5%. Maruti also announces price hikes across models in April.
Hello and welcome. You're watching Business Lunch. I'm Nisha Poddar, and with me, as always, is my co-anchor, Pavitra Parikh. So, Pavitra, there's a shade of green, but it is just in a tight range. And yes, some markets have recovered from the lows that were seen in the morning trade. But if you really take a look at it from 17,100 to 17,185 odd levels at the moment, which is high point of the trading session for Nifty 50. So it's a very tight range, but at least the green momentum is giving a little bit of consolation. Bank Nifty is the one which is outperforming the key indices, holding up well at 0.35% gains. And on the other hand, mid caps are the really soft pocket and the point of weakness for the market today. It is in the red zone, but still not selling off too much. So at the moment, market's still looking tentative. Advanced decline ratio is also neck and neck. So that needs to be also seen which way it turns after the lunch hour. Generally, there is a trend reversal at this point. But if we really look at some of the key contributors, Reliance is down today, Asian Paints also, but some of the consumption stocks doing well along with the metal pack today, Pavitra.
Hi, Nisha. So, like you pointed out, it's an absolutely quiet day of trade after we got that initial intraday recovery. But we've been at the flat line for a while now, right? Like Nisha was saying, the consumption stocks are doing well, so a few of those will come up. In addition to that, you have some from the auto pack which are holding up with good gains. Like we told you, we've been getting news on, price hikes coming through in order to, before the regulatory norms do kick in and the, change in emission standards. So a lot of the stocks buzzing around on that. What's not doing well is the IT pack once again. So this week itself, we've seen an over 3% cut on the Nifty IT index. All of the larger names are, seeing cuts, but some of the mid caps as well. So the likes of Persistent, LTI, Mindtree, these ones are seeing, big cuts. So keep these on your radar. Asian Paints is, of course, down on a brokerage note, but you have Berger falling in line as well. So that's down 2.5%. And once again, you're seeing that split between the private banks and PSU banks, but it's the opposite to what we saw yesterday. So the PSU banks, like you can see on your screen, they're seeing a bit of a cut, while the private banks are holding up better today. So that's what's going on with the market. We're going to come back to this, but let's talk about the big cue that we got last night from the US Fed when they raised rates by 25 basis points in what was its 9th straight hike since March of 2022. The Fed's commentary also indicated that rate hikes may be coming to an end, but Chairman Jerome Powell in his speech made it quite clear that rate cuts was certainly not on the table in 2023 as the Fed walks a tightrope between fighting inflation and, of course, providing relief from the banking crisis that we're seeing in some of the regional banks. Jerome Powell also commented that although the path of the economy remained quite uncertain, he is still hopeful that we could get a little bit of a soft landing for the economy. So let's listen into that.
Inflation remains well above our longer-run goal of 2%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 5.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy.
So Wall Street also came under pressure late last night after U.S. Treasury Secretary Janet Yellen said that the FDIC was not considering a blanket insurance for the deposits, while the Fed chair also said that events in the banking system are likely to result in tighter credit conditions, which could have unknown effects on the economy. Listen in.
Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond.
This is not something that we have looked at. It's not something that we're considering.
Dan,
I have not considered or discussed anything having to do with blanket insurance or guarantees of all deposits.
All right, a bit of a contrasting statement coming through there from Fed Chair Jerome Powell as well as the Treasury Secretary Janet Yellen. That's what we've been talking about. But continuing our focus on global central banks, the Bank of England is also due to announce its latest rate decision this evening, with a 25 basis points hike widely expected. Remember, this meeting comes only a day after inflation in the UK rose unexpectedly in the month of February. So CNBC's Arabile is here with the latest from London.
10.4%, it certainly was a big surprise and a big headache then for the Bank of England. It does offer them kind of the sense of understanding that the situation isn't fixed as yet, right? Perhaps they haven't necessarily reached that terminal rate. The expectation really, even after that inflation print yesterday, was that you'd see 98% of those interest rate swaps really looking towards that 25 basis point hike almost being a certainty effectively, right? With some even considering a 50 basis point hike. So perhaps that is a similar sentiment we will see out of the Monetary Policy Committee from the Bank of England, then assuring people that they will continue to fight inflation. But you have to consider the other side of this, right? You do have an economy which is pretty much stagnant and is heading in a really difficult situation. While for now it has indeed avoided a recession, the question is for how long can it continue to do so?
All right, so that was from Bank of England. So not just Bank of England, even the Swiss National Bank will be announcing its rate decision today, and a 50 basis points hike is priced in. But more important will be the commentary on the Credit Suisse takeover by UBS. And CNBC's Jumana gets us all the latest straight from Zurich.
As you said, a 50 basis point hike is more or less what the market is expecting, about 36 basis points if you want to be specific about it. But this has changed over the course of the last 10 days or so, namely because of the, the stress that we've seen in the Swiss financial system, the very quickly put together bailout of Credit Suisse by UBS, the acquisition of UBS over the weekend, and all of the action that we've seen since then. But what else they're going to be facing questions on was about the details of this rescue plan for Credit Suisse. And we've spoken a lot this week about the decision by the regulators and by the Trinity being the Swiss government, the regulator, and the SNB, to fully wipe out those 81 debt holders. Why was that decision taken? Definitely they're going to get questions about that. Was it politically motivated? And why was the law changed in the very last second? So yes, the focus is going to be on the decision, but of course there are going to be a lot of questions about the actual decision by the Swiss Trinity to get that rescue deal for Credit Suisse over the weekend as well. So it's going to be an interesting one.
It definitely will be an interesting one, and we're waiting by for all of those comments that come through on the rescue plan for Credit Suisse. Jumana, thanks a lot for that. But with that, we do need to get into our first short break on the show. On the other side, we're going to bring you excerpts from a very interesting conversation with Puneet Das of Tata Consumer Products. Hey guys, welcome back. You're still tuned into Business Lunch. Now, demand for tea is looking up after a slowdown in the third quarter. That's the word coming in from Tata Consumer Products. Is Puneet Das speaking to my colleague Shilpa on the sidelines of the launch of their new range of street chais of India. He also spoke about this entire premiumization push in the coffee business as well as increasing rural penetration. So let's listen in to a slice of that conversation.
I think overall there was a deflation effect that we all felt across categories in FMCG, especially rural demand actually got hit quite a lot. But we have seen some really good months, as far as December, January, February are concerned. And while, of course, quarter numbers will be out soon, but the tea trends are looking much positive than what they have been.
What about the larger portfolio? If we also look at coffee, coffee prices also have been firming up.
Right.
Do you think that will require you to once again maybe hike prices of your portfolio? And how's the demand for looking like on the coffee end also?
So, we are a very small player. We're just about 1% share. So really, it's the market leaders who must be feeling the pinch when it comes to coffee prices. In our case, we've been investing behind this portfolio, and it's been really growing well for us. Very fabulous, upwards of 30% growths have been happening. So we have a long way to go, and we are able to sort of, absorb these price increases and move ahead with interventions. It's really the category leader who feels it the most. We have also been launching a lot of innovations in coffee to sort of take it more towards premiumization. And that's where our focus is, while we continue to grow the instant, the mass coffee section, so to speak.
And I want to talk about your overall portfolio also now. What are the expectations for the coming quarter, especially with the summer? Even your other packaged beverage brands, especially the ones that are the cold, that would typically be consumed in summer, if I can put it that way. What's the kind of innovation or expectation of demand coming on from that side if we're expecting a severe summer this time?
So expectation of the quarter, like I said, the quarter results will be out, so you'll be hearing about them. I think, and I can talk about the packaged beverage portfolio. We are leveraging the summers also, in the sense, cold coffee, last time we had just launched it as a liquid decoction, and just about we were hitting and the summers were over. This year we're going to really scale it up.
Okay.
And so that's how we are sort of trying to leverage the summer season also to grow a category which historically not so associated with summers. And apart from that, like, it's business as usual for us.
Right. And, rural markets have been seeing quite a lot of stress. Are you seeing any signs of picking up? Because now there are concerns of El Nino further, sort of denting the rural recovery. What is your sense on the ground there? And how are you also looking at increasing your penetration? I know you have a lot of premiumization focus, but are you at the same time also looking at increasing penetration there?
Yes, in fact, our CEO, Mr. Sunil, has been talking about it, that we have been, what we're doing in rural is really, increasing our reach for more accessible price points. Because at this point in time, the rural growths come in from smaller pack sizes. People downgrade, or people buy economy or lower value pack size, but they want the tea and coffee at home, right? I mean, because that's something that everybody wants every day. So we are increasing our reach. Our distribution has been growing up, growing month on month and every quarter. And we are growing lower unit packs also, as much as we focus on premiumization. Right. So action is happening at both ends.
All right, let's get you a CNBC TV18 exclusive then. And the government has sought legal opinions on the regulations to curb the operations of e-pharmacies over concerns of leaks and misuse of data. My colleague Timsi Jaipuria is right here with all the details on this. Timsi, tell us, what is this about the legal opinion that the government has sought? And this is going to hurt the e-pharmacies, which have really come up in the last few years.
Well, as you rightly said, when it comes to the operations of e-pharmacies, that has been under question for quite some time now. Remember, government had issued show cause notices on to over 20 e-pharmacies, asking them to explain in writing that why should they be allowed to sell medicines, since they are not part of a regulation, and according to the government, they cannot sell medicines right now legally, for which these e-pharmacies have sought time. And in the meantime, what government is doing to strengthen and to get more teeth to stop these operations of e-pharmacies, they have now sought legal opinion. Ministry of Chemicals and Fertilizers, which is the parent ministry under which this regulation could come in, which could come in as early as in the next 3 to 4 months, is what sources say, on which right now government is working when it comes to the legal opinion as to how they should frame this new regulation to ensure that e-pharmacies do not sell medicines, their operations are curbed in the country. Government feels that e-pharmacies should not be allowed to sell medicines online because of the concerns such as data leaks of patients. Then also when it comes to how the government feels when it comes to these e-pharmacies, they try and give suggestions for self-medication, which is harmful for patients. And to protect patients, their data, their personalized information, and yes, most importantly, their health. That is why government is now coming into action. They feel that this is an urgent need because, as you rightly said, e-pharmacies have come in a big way, especially post-COVID, to actually deliver medicines at the consumer end in less time. And also in the past, we've seen Chemist Association threatening the government that there's a big threat that they see from e-pharmacies and they could soon halt operations when it comes to these chemist associations, etc. We must be aware that Tata Group, Reliance, and many others have invested big time in e-pharmacies, so it could hurt these investments. But yes, as of now, legal opinion first is what government is looking at to form a proper draft regulation to be moved in the parliament.
All right, Timsy, thanks a lot for getting us all of the details on this important story. But with that, it is time for another break on the show. We're going to come back and talk about the market on the other side.
Welcome back. You're watching Business Lunch, and markets stable at 17,180 odd levels for Nifty 50. Advanced decline neck and neck, so directionless when we look at the markets at the moment. Well, News 18 Network is excited to announce the third edition of Rising India. Now, the most anticipated thought leadership forum in the country. The theme for this year's edition is Real Heroes, where we bring you stories of some of the extraordinary common people and their uncommon achievements. Here's a story of the artisan who is finding unique solutions to keep our heritage alive. Take a look.
When we start losing our traditional knowledge as we walk down the path of progress, it is artisans like C.V. Raju who find solutions to keep our heritage alive. C.V. Raju was born in the village of Etikoppaka, which specializes in making wooden toys for children using traditional methods. However, there came a time when it seemed that there was no place for it anymore in the machine production-based modern world.
In year 1988, the income is very, very low when compared to the agricultural labor income. Then we started a case study on this, and the findings that we found: the lack of quality conscious, at the same time lack of diversification.
After understanding the problem, C.V. Raju began searching for the solution. He developed chemical-free colors using the roots, bark, trunk, and other parts of plants. This helped them to create superior products. However, it was not enough to simply create better toys. These toys also had to reach the market.
In most of these artisans, they confine only 5 to 6 different items, which they are not supporting and credible to their income and their expenditure.
He concentrated on new ways of marketing and created a cooperative of artisans called Padmavati Associates. This initiative gave a new breath of life to Etikoppa art, and he has been felicitated for this as well. His success has even been appreciated by Prime Minister Shri Narendra Modi, who also mentioned him during Mann Ki Baat.
Remember, you can stay tuned as we bring you many, many more such stories and the real heroes working across diverse fields in our special series, Rising India Real Heroes. So remember, you can stay tuned and catch all of those interesting stories. But with that, we do have to wind down in this edition of Business Lunch. Thank you very much for tuning in. We have Mid Cap Radar up and to.